Watch this if you want to know what the best type of life insurance is to get. And really, it just depends on what your goals are and what you're trying to accomplish. There are three general types of life insurance. You have term life insurance, whole life insurance, and universal life insurance. The name tells you exactly what each does. Term, aka temporary life insurance, only covers you for a small period of time. Relatively, it can be 5 years, it can be 10 years, it can be 30 years. However, it's the least expensive to get started, but it's the most expensive over time, because when you go to renew that policy after that 30 years, they're going to be taking into account your new age, your new health, and everything that as it relates to that. One thing that a lot of people don't know about term insurance is it's actually, of all the three life insurance types, that's the one that pays out the least amount of times. And it's kind of like a bittersweet thing, because the reason why it doesn't pay out that much is because if you get a term life insurance quote and the quote is very inexpensive, good news is, according to your data, according to your health, according to your age, and according to a lot of other factors that the insurance company takes into account, you're not going to die anytime soon, or you're not going to die inside of whatever term that they're quoting for you. That's why it's so inexpensive. However, whenever the mortality tables shift away from your favor, when you go to renew or start a new term policy, then that's when you'll see it's so expensive. The older you get, the more your health maybe declines a little bit. That's why it's the cheapest to get started, because the term policy is very inexpensive, but over time it becomes the most expensive, and then it gets to the point to where the premiums, it's not possible for you to keep it up. Now you got whole life insurance, which whole life is great, right? Hopefully whole life has been around for a while. However, what did I tell you? The name tells you what it does. Whole life insurance typically means you're going to be paying on it your whole life, and usually is structured for death benefits. So even if you are putting in a lot of money into this whole life policy, building up cash value, utilizing the benefits of Internal Revenue Code 72E, 7702, and 101A, TAMRA, TEFRA, and DEFRA, utilizing those things in order to get you some tax-free retirement money and be able to, use it throughout your life, that's cool. But because it's structured primarily for death benefit, a lot of that extra money that you're earning in this tax-free vehicle is going to be going toward paying for that death benefit. A lot of people don't like that. Now, if your goal is to get a policy that's best suited for what a lot of people call infinite banking, or being able to utilize tax-free cash from your life insurance while you're alive, then you want to look at universal life insurance, specifically index universal life insurance. Now, let's look at the definition for universal. So, universal has a lot of definitions for it, but as it relates to a tool or a mechanism, because all life insurance is just a tool. Universal means something that isn't restricted to one position or one place. It can be moved, and that's exactly what a universal life policy does. It's flexible. You can see exactly what the minimum is. You can see what the medium premium is. You can see what the most premium is. You can't do that with a whole life policy, and a term policy doesn't even have any cash value. If you want the best policy for you, if you want a policy that you're able to put money in, let it grow tax-free, and you can utilize it tax-free, and probably even retire early, or if you're currently retired, switch from having all these taxes and fees coming out of your money to switch into a situation where you're not taxed as much, then Index Universal Life is probably the way to go. The reason why I don't necessarily say variable universal life is because variable universal life, just like Index Universal Life, is very flexible. It's transparent. It's not fixed to one position. However, a variable Index Universal Life, if you have a bad year in the market, you don't earn any money that year, but you don't lose any money as well due to market volatility. However, if you have a variable universal life policy, all that cash value can be wiped out by a bad investment, or a placement of that money. Now, the only thing that the variable universal life does is guarantee the death benefit. So no matter what happens to that cash value, the death benefit is still there. But if you are structuring A universal policy for life benefits. The death benefit is only secondary. You want a policy that allows you to move and do what you need to do while you are alive. And that's Index Universal Life. That's the best life insurance in my opinion.